As of today, Sunday, April 26, 2026, the stock market is currently closed. Trump Media and Technology Group Corp., trading under the ticker symbol DJT, finished its last active session on Friday, April 24, at a price of $9.35 per share. This represented a modest climb of 1.96% during that final trading window, with the price fluctuating between a low of $9.02 and a high of $9.46 throughout the day. While a 2% bump might seem like a small win for those watching the ticker on a Friday afternoon, the reality beneath the surface is far more complex and arguably more urgent than a simple green daily candle suggests. The expectation from the broader market has long been that Trump Media and Technology Group is essentially a high beta proxy for political sentiment. Many investors believe that as the political climate heats up, the stock will naturally find a floor or even see massive retail-driven spikes. However, the reality we are seeing in the latest data is a stark contrast to that political barometer theory. What most people missed this weekend is a massive leadership shakeup that happened right as the closing bell rang. Devin Nunes, who has steered the ship as CEO for 4 years, is out. Kevin McGurn, a seasoned media executive with a heavy background at places like Hulu and NBC Universal, has been named the interim CEO. This isn't just a routine change in the front office. It signals a desperate pivot towards actual revenue and streaming infrastructure, moving away from the purely ideological focus that defined the Nunes era. If you look at the recent stock movement, the trend has been punishing for long-term holders. Just a few months ago, in January 2026, the stock was trading near $14. Today, at $9.35, it has shed nearly a third of its value in a single quarter. The trading volume on Friday sat around 2.47 million shares, which is relatively thin compared to the high volatility sessions we saw in late 2024 and 2025. This tells us that the diamond hands retail crowd might be thinning out, and the institutional activity is becoming increasingly cold. When you look at platforms like the Robinhood app or search for investment help on various investing sites, the sentiment for DJT has shifted from speculative goldmine to cautionary tale. Even with the recent appointment of McGurn, the market's initial reaction was muted because the financial reality is hard to ignore. In 2025, the company reported a massive loss of $712 million on just $3.7 million in revenue. That is a staggering gap that most traditional analysis on Fidelity or Interactive Brokers would flag as a high-risk scenario. The expectation was that Truth Social would become a dominant hub for digital advertising. Yet the reality is that the company is now considering spinning off the platform entirely. There is a $6 billion merger deal on the table with TA Technologies, a nuclear fusion company. This is the ultimate expect the unexpected moment for DJT investors. Why would a social media firm merge with a fusion energy company? It suggests that the current business model is no longer sustainable as a standalone entity. For those using online investing tools or a SoFi robo-advisor, this level of pivot creates a massive amount of uncertainty. Is this still a media company, or is it becoming a diversified holding company for high-risk technology? While we are on the subject of high-risk plays, I want to hear from you. Comment below how many shares of Trump Media and Technology Group you currently hold, or if you've moved your capital into more stable assets like Fidelity ETFs or Apple stock recently. Let's break down what this company actually does for a moment beyond the headlines. Trump Media and Technology Group Corp. Operates Truth Social, a platform designed to provide a cancel-free environment. They also have Truth Plus, a video streaming service, and have toyed with the idea of Truth.fi for financial services. Their business model relies heavily on the personal brand of Donald Trump. When you use a Robinhood stock trading account to buy DJT, you aren't necessarily buying a technology company. You are buying a piece of a political movement's digital infrastructure. In the past, this led to massive surges, such as the 52-week high of $27.78. But as the hype fades, the lack of institutional brokerage support and the reality of their income statements, showing those deep losses in 2025, start to weigh the price down towards its 52-week low of $8.31. Institutional activity is another area where the expectation of support is meeting a harsh reality. While some smaller wealth management firms like Trueblood Wealth Management have increased their stakes, many larger funds are treating this like a hot potato. The volume of shares traded by insiders has also been a point of tension. Throughout late 2025 and into March 2026, we saw multiple insiders, including Devin Nunes before his departure, selling off portions of their holdings. When the people running the company are selling at $10 or $12, it makes it very difficult for a retail investor on a SoFi trading platform to feel confident buying in at $9. Looking at the broader sector momentum, we are seeing a flight to quality. While Nvidia stock and other tech giants continue to benefit from massive capital expenditure and infrastructure, DJT is struggling to find its footing in a crowded media landscape. Online investment strategies are currently favoring companies with high free cash flow and clear paths to profitability. Trump Media, unfortunately, is still in a phase where it is burning through cash at an alarming rate. The Interactive Brokers platform often shows a high cost to borrow for shorting this stock, which indicates that while many people want to bet against it, the liquidity isn't always there to make it easy. This creates a coiled spring effect, where any bit of positive news could cause a temporary spike, but the long-term gravity of the financials usually pulls it back down. The future outlook for DJT hinges on two massive catalysts. First is the TA Technologies merger. If that deal closes and the company successfully pivots into the energy sector, we could see a total re-rating of the stock. Investors who use self-investing strategies might see this as a way to get in early on a fusion play, even if the entry point is through a social media shell. The second catalyst is the 2026 midterm election cycle. Expectation says the stock should rally as political engagement increases. However, the reality is that the platform's user growth has stagnated. If Truth Social can't prove it has a growing, monetizable audience, the political excitement might not be enough to overcome the fundamental decay of the balance sheet. For those of you managing an individual brokerage account or using the Fidelity mobile app to track your portfolio, the risks here are clearly defined. You have a company with very little revenue, massive net losses, and a CEO transition in the middle of a strategic identity crisis. On the other hand, the expectation of a Trump rally is a powerful psychological force in the market. This creates a scenario where the stock doesn't trade on logic, it trades on belief. But as we've seen from the $14 to $9 drop, belief can be a very expensive sentiment to hold on to when the underlying numbers don't support it. If you are looking for investment help, the best thing you can do is compare the volatility of DJT to more established players. When you look at your Robinhood investments or your SoFi active investing dashboard, compare DJT's chart to something like a Fidelity mutual fund or even a broad index. The contrast is night and day. DJT offers the potential for 20% swings in a week, but it also carries the risk of a slow, painful grind towards zero if the TA merger doesn't provide the life raft the company needs. The institutional ownership data from Fintel shows that while some firms are nibbling, the smart money is largely staying on the sidelines, waiting to see if Kevin McGurn can actually turn the Truth brand into a profitable enterprise. In summary, the expectation for Trump Media and Technology Group was that it would be the ultimate free speech tech play that would rival the big platforms. The reality, as of late April 2026, is that it's a company with a $2.5 billion market cap that is struggling to generate more than a few $1 million in sales while losing hundreds of $1 million. The price of $9.35 reflects a market that is skeptical but not yet ready to give the ghost. The tension between the political narrative and the financial reality is at an all-time high. We have a new CEO, a potential merger with a nuclear fusion company, and a stock price that is hovering dangerously close to its yearly lows. Whether you are using Interactive Brokers fees to your advantage as a day trader or holding long-term in a Fidelity Iris account, you have to decide if you are betting on the man or the metrics. Historically, betting on the metrics has been the safer play, but DJT has a habit of defying the odds just when everyone counts it out. We will be watching the opening bell on Monday very closely to see if the McGurn appointment brings a fresh wave of buying or if the downward trend continues. Keep your eyes on the volume and the institutional filings, as they will tell the real story long before the headlines do. Maintaining a grounded perspective in a stock this polarized is difficult, but it's the only way to protect your capital in the long run. Reality has a way of catching up to expectations eventually, and for DJT, that confrontation is happening right now. Disclaimer. This video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, outshare with your friends, bell, subscribe for more updates.